Sit behind any active trading desk, and you are bombarded by glowing charts, flashing numbers, and endless streams of data. It is an overwhelming environment. Take a look at this asset's price action. Green candles rapidly push the price higher, then instantly collapse, trapping anyone who bought near the top. That happens because a price chart, like this old ticker tape, only tells you what just occurred. It is a historical receipt of past transactions, not a measure of the energy actually driving them. Relying entirely on that surface-level price action gives you a false sense of security. It leaves you blind to a rally that is already running out of steam. To avoid these traps, you have to look beneath the surface numbers and measure the physical tug-of-war taking place right now between buyers and sellers. In the 1980s, a trader and author named Dr. Alexander Elder developed a specific mathematical tool to do exactly that. He called it the bull's power indicator. Instead of simply plotting price coordinates, this tool acts as an X-ray for market momentum. It constantly calculates whether the buyers have the stamina to keep pushing the market higher. This tool shifts your entire focus. You stop reacting to past prices and start quantifying the psychological battle to see exactly who's in control. Let's break down how this works. Dr. Elder's formula relies on two variables: a single point representing the period's highest price, and a smoothed curve representing the 13-period exponential moving average, the market's recent baseline. The indicator subtracts that baseline average from the highest price, isolating the raw maximum buying effort. That difference is plotted below your main chart as a single bar in a histogram, resting above a horizontal zero line. By watching these bars develop, you read the momentum. Bars growing taller show that buyers are gaining confidence. Shrinking bars mean that upward momentum is fading. By stripping away the noise of raw price fluctuations, you are left with a pure, undeniable measurement of offensive market strength. When you place this momentum reading directly underneath the actual price action, you can see traps forming in real time. Professional traders use this exact combination to look for a specific, high-probability setup known as divergence. Look at the top half of this chart. We have a clear uptrend hitting a sharp, brand-new high. On the surface, this looks like a strong, healthy market. But look at the bull's power histogram directly below it. Even though the price went higher, the momentum bars actually peaked lower than they did previously, creating a clear downward slope. That divergence is an immediate warning sign. It provides mathematical proof that buyers are exhausted, and the surface rally is a deceptive trap. However, relying on bull's power entirely on its own during choppy, directionless markets will often lead to premature entries. To map the complete balance of power, you pair it with its counterpart, the bear's power indicator, along with a long-term moving average to define the broader trend. Here is how you put that strategy into practice. First, you confirm a long-term bullish trend on this chart. Then, wait for the bull's power histogram to dip below the zero line into negative territory and execute your trade the moment it crosses back above zero. Demanding those specific conditions transforms a single indicator into a comprehensive statistical shield, ensuring you only buy the dip when momentum is truly on your side. It is easy to look at the geometry on your screen and forget what it represents. As we see here on this real-world exchange board, those shifting numbers are actually quantifying the collective conviction of human market participants. Understanding that human intensity allows you to hold your winning positions with real confidence and gives you the objective data needed to exit losing trades early. Open up your own trading platform, apply the bull's power indicator to your favorite currency pair, and watch how it maps out these hidden shifts. Once you master this tool, you stop guessing at the illusion of price, and you start profiting based on the